Hi, everyone. Chris Johnson here with MoneyMorning.com on May 30th, 2023, and we're here to talk about none other than NVIDIA. The stock has taken off another 5% today after the company announced details behind their newest AI supercomputer. I could go through the details with you, but let's face it. Most of us, probably 99.9% of us, don't understand what a 144 terabyte GPU for giant models powering yada, yada, yada. What we see is a stock that's going through the $400 level, not so long after it crossed $300. And if we don't have it in our portfolio, we're wondering, should I go ahead and buy it right now? Is it going to go higher? Is $500 going to be next? You know what? It may be, but I'm here to tell you that historically, you should take your finger off the buy button just for this moment in time, especially in this day of FOMO investing. What we've seen over the last week is an absolute feeding frenzy, and it's happened before in a number of stocks. You can go back and look at your Apples and your Microsofts and your Amazons and find similar situations where they've gone parabolic. And usually the FOMO feeling takes over, and investors, and I'm talking about investors, people who are holding for maybe 2 or 4, 6, 8 months, even longer, investors inevitably pile into the stock at these high prices because they're feeling like they're going to miss out. And inevitably, the traders start to trade it back down. Because remember one thing here. If somebody bought it at $300 a couple of weeks ago, and right now it's trading at $410, they want to take some of their profits out at some point just for fear that they're going to miss out on these profits by not locking them in. So I want to show you something about the NVIDIA chart right now that'll get you to take your finger off the button. It is actually performed something that I call a crescendo top. And what that means is cash has moved so quickly into the stock that it is overheated, let's call it, from a couple of different perspectives. Remember, not everybody wants to hold NVIDIA. The people that are out there that want to hold NVIDIA have either bought it or they're sitting on the sidelines waiting right now. But there's a finite amount of cash usually for stocks like this. And an event like we've seen over the last couple of weeks, and even the last, let's call it 6 months, has sopped up or pulled in a lot of that finite cash and maybe a little more beyond that from other areas of the market that have been suffering. But right now, you have to think of this as to whether or not it can continue this breakneck speed higher. And here's what tells me that you're going to get a better buying opportunity, maybe in the next couple of weeks, maybe over the next month, by just being patient with NVIDIA. Now, I mentioned the crescendo pattern, something that I track often. All it does is look at when we may have had one of those events where everybody's gone all in on the stock, and there are very few buyers that are left on the sidelines. It's marked by this. Number one, this blue line here is called a Bollinger Band. You can look it up. What I'm going to tell you is that when a stock trades above or below it, it's acting unusual. And that's mathematically. The distribution of the stock price is now acting unusual. And as we know, whenever something in the market or that is normal in terms of math is acting unusual, it has to go back to being normal again. It's what we call regression to the mean. And in this case, it would mean that you would see NVIDIA start to pull back down towards its moving averages. Now, it doesn't mean that you're going to see it go all the way back down to $300 or $285. If it did, I'd love to buy it at that point. But it does mean that you may get a chance to see it at $360 or $350. And let's face it, $360 compared to $410, now you're starting to talk about feeling a little more secure about buying into a stock that's got that upside potential. So first step is that Bollinger Band. We've broken that. Second is a huge spike in volume, and we saw that last week right after the company's earnings announcement. That is everybody piling in all at once, trying to smash through that door, buying NVIDIA stock regardless of what was going on with the price. And as we know, it was going through the roof. But that is that cash being used. Think of it as gas in the tank, and all of a sudden you stepped on the gas and the fuel gauge is going down towards empty. That's the buying power going into NVIDIA at that point. Then the final and last piece of that crescendo moment is right here. It's something that I call being overbought. It's when the RSI of a stock goes above 70. When all three of these things happen at once, an excessive amount of volume, unusual volume, a break above the Bollinger Band, which tells me the stock is acting statistically unusual and it's oversold. If I'm thinking about buying the stock or if I want to buy it, I back off the buy button at that point and I start waiting for a better opportunity. Here's how I recommend you set a better opportunity. Put a price in your head right now so that you can have a line that when the stock comes back down to, you're willing to start biting on the stock. Maybe not everything that you want to put in, but if the stock comes down to $360, you buy a little bit. Then if it comes down to $350 or $340, a little bit more. It's what we call dollar cost averaging when you're investing, and it is a way to build into a position as a stock price is coming down to lower your average cost. It's that simple. The pros use it all the time. You can use it as well. We'll talk about that in other investing topics as we move forward, but for now, if you're taking a look at that NVIDIA trade with that FOMO feeling, take your finger off that buy button. Give it a break. Let it come down to your price. Set it and then move forward. As always, I wish you the best trading success. Hope you have a great day, folks. Bye-bye.